Without further ado, I would like to welcome to the stage someone we already saw yesterday, Efrat Fenigson. She is one of the top voices in tech in Israel, and she's also leading her own podcast. Exactly. Let's welcome her to the stage. She will be talking about, it's an interesting topic. There is a game, musical chairs. Does anyone know this game, musical chairs? Probably one person. So it takes two. So it's me and you. So musical chairs of monetary order. Let's welcome Efrat with a round of applause.
Woohoo! Thank you. Thank you. Okay. Good morning. The musical chairs of the monetary order. Let's take a look at what they are doing. When it comes to changing a monetary order, things may look very civil on the outside. But don't be misled, behind the scenes, it looks more like this game of musical chairs. A bit more chaotic. Today we'll dive into the evolving global financial landscape, looking at how global agendas, nation-states, and financial institutions are piecing together a new monetary system under the banner of innovation, security, and climate action. The puzzle pieces are digital currencies, stablecoins, CBDCs, and even Bitcoin, as well as carbon markets and digital ID. I'll attempt to map out the fast-changing chessboard and connect the dots between financial trends, political agendas, and the fight for economic freedom. A bit of background. 81 years ago, Bretton Woods agreements made the United States the world empire and the US dollar the world's reserve currency. It architected a blueprint for how the world would operate money for the next decades. Historically, every 80 to 110 years, we see a change in world empires. At the end of every cycle, we experience crises, emergencies, pandemics, and wars. It's the fourth turning. Will the US and the US dollar maintain their position in the next cycle? I do believe that's the intention as the world enters the truly digital age of money.
We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. We are having a profound change in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history. This repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging existing power, if you take those factors and look at the factors, those changes in the orders, the system, are very, very disruptive.
Ray Dalio. Dr. Pippa Malmgren tells us exactly what the plan is. This is from 2022. Whether implemented through CBDCs, stablecoins, etc., countries are racing to implement their digital financial systems.
What underpins a world order is always the financial system. I was very privileged. My father was an advisor to Nixon when they came off the gold standard in 71, and so I was brought up with a kind of inside view of how very important financial structure is to absolutely everything else. And what we're seeing in the world today, I think, is we're on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new one, the new accounting, is what we call blockchain. It means digital. It means having an almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on. It also raises huge dangers in terms of the balance of power between states and citizens. In my opinion, we're going to need a digital constitution of human rights if we're going to have digital money. But also, this new money will be sovereign in nature. Most people think of digital money as crypto and private. But what I see are superpowers introducing
the United Nations Agenda 2030, signed by 193 countries, lays out a global framework of 17 sustainable development goals. But beneath its soft language lies a collectivist architecture that centralizes power while reducing individual rights. The World Economic Forum envisions your digital ID in the center of your life, essential to accessing modern financial systems and tightly interwoven into today's monetary trends. If the state knows who you are and what you do with your money or with your finances, it allows you to function. The digital ID is a key pillar in Agenda 2030.
The UN estimates that 10 of the 17 sustainable development goals cannot be met without first closing the identity gap.
Regulators and financial institutions favor certain instruments over others these days, from tokenized assets and deposits to stablecoins, CBDCs, KYC Bitcoin, ETFs, strategic Bitcoin reserves. All are at play in various stages. Cash, non-KYC Bitcoin, that's less appealing to the state at this stage. So as long as you're identified and the relevant institution grants you permission, you're good to go. Essentially, we're at the buffet stage, the buffet of monetary instruments. Think of chefs as nation states and central banks, and they're experimenting with various dishes till they find the chef's favorite. Here are a few global trends that are accelerating this new monetary order. BRICS strengthening and de-dollarization, banks closures and debanking, rising debt and deficits, decline of cash and privacy, Bitcoin as a growing threat to state money, and of course, damn wars. CBDCs reflect the Overton window of financial control, with retail CBDC on the extreme dystopian end of this spectrum. They're favored by authoritarian regimes like Iraq, Nigeria, and Pakistan, who are banning Bitcoin while pushing for total cash elimination. But the West loves them too. So globally, over 130 countries, representing 98% of world's GDP, are now exploring CBDCs, and central banks are more eager than ever to roll them out, as this graph clearly shows. The good news is that we the people, pushback on retail CBDCs seems to be working in some countries, while wholesale CBDC is on the rise, with about 44 such pilots at play. Check out the Thailand Central Bank governor.
The hype was focused on the retail CBDC space. And a lot of that hype has not played out, because despite all the pilots, and we did them too, we've been quite active in the CBD space for quite a while, and we did retail pilots. We have very good retail payments infrastructure already. So the additional benefit of having retail CBDC is not entirely clear. So I think that combination of not having a very clear use case, plus the concerns that people have, like on the privacy and whatnot, have caused a healthy skepticism about when we're likely, if we're likely to see stuff happen in terms of a full production rollout of retail CBDC. Okay. That is different from wholesale CBDC. We at the Bank of Thailand, probably other central banks, think the same way, that the use case are much clearer, and also that the downsides and the risks of wholesale CBDC are so much lower.
So, the central banker from Singapore will tell you how hard it is to reinvent the wheel and create the foundation of the new monetary system.
Very quickly, we came to the conclusion that it needed a horizontal foundational digital infrastructure to enable that interoperability across networks, across assets, and across currencies, because this represents, the most significant opportunity to reap the full benefits of asset tokenization. So on the one hand, there's the public blockchain, right? It has a global network, right, which is there.
Bitcoin.
But for accountability reasons, right? And governance reasons, you can't reasonably expect, regulated FIs to put high-value transactions through on a daily basis, right? Then on the other hand, FIs themselves come up with their private permissioned networks, but on a FI-specific basis, can't scale. So then we landed in between, which is what we call the public permissioned network, which is public blockchain equivalent infrastructure serving the regulated wholesale financial market space.
So, when central bankers reached that critical CBDC design phase, they realized they need a unified ledger and a settlement infrastructure, something Bitcoin has offered since day one. So 24 institutions launched a project called GL1, Global Layer 1, a long-term project to set standards for digital assets. Reinventing the wheel is hard and stupid, and Bitcoin has the front-runner advantage. The EU plans to launch the digital euro, the CBDC, starting October 2025, a 2-year step which costs 430 million euros, positioning it as a strategic defense against crypto and US stablecoins, which we'll get to soon. But it goes further. Under Rearm Europe, 800 billion euros will fund military expansion, and a new savings and investment union could redirect up to 10 trillion euros in private savings to strategic projects. Meanwhile, the ECB, the European Central Bank, is working on a distributed ledger connecting 48 central banks, so far not very successfully. And taxpayers' money is invested into more propaganda campaigns to keep people's trust in the ECB.
Do you want to know more about the digital euro? Let's find out more. Evelyn, in 20 seconds, can you answer our questions? Why do we need a digital euro?
Well, our currency needs to keep up with how we want to pay. So currently, more than half of the people prefer to pay digitally, and there is not one single European way to do so. The digital euro would fill that gap.
There is no way to do it. Right. China and the EU are strengthening financial ties, especially amid trade friction with the US. And China reports over 800 million CBDC wallets and 10 trillion yuan in transactions, thanks to a deep integration with popular consumer apps. As Klaus Schwab says, China is the blueprint. Hong Kong, South Korea, Israel, and India are following the EU's footsteps and are all working on their CBDCs. And among multiple countries, this is Latvia, by the way, I put some information to just show you that even in Latvia, they're working on their digital euros. Yeah, thanks, go up, thanks. And they're following the ECB plans for digital euro as well, but only 26% of citizens actually said that they intend to use it. Meanwhile, it's licensing crypto firms under MiCA and considering a strategic Bitcoin reserve, though at the moment it's not yet a law, it's just a declaration. Moving on to stablecoins. Thank you. Stablecoins are designed to hold a stable value pegged one-to-one to a reserve asset such as the US dollar. They're expanding fast as a bridge between crypto and traditional finance, with about 200 projects and $265 billion in market cap. Their use now exceeds $100 billion in daily volume. JP Morgan coin alone moves $2 billion daily. The momentum is clear. Major banks, payment platforms, and even retailers are exploring issuance. Their market is projected to reach $2 trillion by 2028. Trump's administration understands that stablecoins can be a key to unlock the next level of the game, the digitalization of the monetary system. The recently approved US Genius Act reclassifies stablecoins as a treasury-regulated asset class. They must be backed one-to-one with liquid assets, audited monthly, and comply with strict AML/CFT rules. No interest is allowed, and only approved issuers can participate. These aren't securities or commodities. They're national financial infrastructure under the Bank Secrecy Act. When big tech or payment giants issue or integrate stablecoins at scale, KYC and reporting will be scaled as well.
Today marks a seminal moment for digital assets and global dollar dominance, with President Trump signing the Genius Act into law.
It's delayed, sorry.
This bill provides the fast-growing stablecoin market with the regulatory clarity it needs to grow into a trillion-dollar industry. Stablecoins represent a revolution in digital finance. The dollar now has an internet-native payment rail that is fast, frictionless, and free of middlemen. This groundbreaking technology will buttress the dollar's status as a global reserve currency, expand access to the dollar economy for billions across the globe, and lead to a surge in demand for U.S. treasuries, which back stablecoins.
Sorry about the lagging, but stablecoins offer financial stability in struggling economies while extending U.S. influence by bypassing local governments. They expand the dollar's reach, which is what Besant was saying here, but also state-level surveillance. For Bitcoin adoption, they build rails, and Bitcoin doesn't really care. But on privacy, they're fiat in digital form. Bitcoin remains the only alternative. Thailand, Cambodia, Hong Kong, to name a few, are all experimenting with stablecoins. So are the UAE, Australia, and even the EU. All right, moving on to Bitcoin, where the game theory is starting to play out. Trump's executive order from January bans CBDCs while greenlighting stablecoins and becoming crypto-friendly. And the latest digital asset reports sets a clear policy shift. Bitcoin is named separately from crypto. The white paper is referenced, and Satoshi is mentioned directly. Bitcoin is now framed as the foundational layer of the digital asset ecosystem.
From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin.
Never sell your Bitcoin. On top of that, SEC Chair Paul Atkins says he's in favor of self-custody. New Hampshire, Texas, and Arizona have already passed laws to create strategic Bitcoin reserves. Another 13 states have introduced similar bills. Senator Cynthia Lummis has proposed acquiring 1 million Bitcoin over 5 years. It hasn't been approved yet. Also, Missouri is progressing to abolish capital gains tax. A new wave of institutional buying creates 99 public entities holding Bitcoin treasury. This is in the US only. Globally, it's about 290 worldwide, and this number changes every day, grows every day. And more Americans now hold Bitcoin than gold. This is definitely a trend. Some good politicians, yes, there is such a thing, are trying to push through Bitcoin in other countries, and it's not that easy. Russia is in the Bitcoin race too, mining, regulating, trying to control as much as possible, the thing that is very hard to control. El Salvador, under IMF pressure, rolled back Bitcoin's legal tender status in January 2025. Now it's optional, but obviously El Salvador is in the game. It's joined by Pakistan, Thailand, Taiwan, all starting to introduce Bitcoin. Also, South Korea and Bhutan now accepts tourist payments in Bitcoin, as well as mining and operating a strategic reserve. Lastly, let's look at another piece of the puzzle: carbon markets, driven by climate agenda. They could be an important piece in the new monetary order. Remember Agenda 2030 and its goals? Climate plays a big role in this agenda. It affects all other sustainable development goals, including the new monetary order. It has become a justification to shape economic behavior, from restricting emissions to influencing monetary decisions. It now anchors major financial policy shifts.
Climate change is still on top of the global agenda. From decarbonizing to nature-based solutions, from building a circular economy to developing nature credits, the Paris Agreement continues to be the best hope for all humanity.
Best hope. Ursula thinks Paris agreements are critical. Trump seems to think otherwise, pulling the US out of the Paris agreements. French President Macron recently called for a public financial shock to fight global warming, revealing how environmental goals are being used to justify a global financial reset. How can climate be used to gain greater control and produce more fiat? Here's a product that luckily was taken off the market about 4 years ago.
Launching Do Black, the world's first credit card with a carbon limit. Simply put, it's the first credit card ever to stop you from overspending. Not based on your available funds, but rather on the levels of CO2 emissions caused by your consumption. Do Black helps you track your climate impact and ensures that you reduce it by 50% in line with the UN 2030 recommendation.
They're just here to help you. You can't do this yourself, so measuring personal carbon footprint can also be a way to control and monetize.
Where are they traveling? How are they traveling? What are they eating? What are they consuming on the planet?
Carbon markets are booming as states monetize nature, creating new revenue streams under the guise of sustainability. But in reality, fiat incentives often empower bureaucrats to profit from resource control, not protect it.
Today, carbon pricing, ETSs, carbon taxes already cover about 25% of global emissions, right? We should actually look at scaling this, right, to cover all 100% of carbon emissions. And beyond carbon, let's think about other aspects of nature that are easier to quantify. We probably will not be able to quantify everything on day one, but what about water?
Water?
Right, that's also quite possible for us to start integrating systematically into current trading carbon pricing mechanisms.
Right, water. Psychotic. I don't think the climate agenda will prevail. It's unsustainable and goes against life itself. But dismantling it will take time. Okay, I hope this gives you a glimpse into the puzzle. Every country will navigate its own path through this transition, and the road will be very bumpy. But Bitcoin, resilient, decentralized, and censorship-resistant, offers the most mature technology and best store of value asset, followed by its medium of exchange capabilities, creating the clearest path for self-sovereignty and financial freedom in this emerging monetary order. We have a few more years of this ahead of us till things settle down, and hopefully we'll see Bitcoin emerge as the new reserve asset in the new monetary order of the 21st century. While they play musical chairs, you get on the ark. Thank you.